Hi there, a very good morning and good afternoon to all of you from this chilly Dehradun here. And I welcome you all in this live session. And I know most of you might not get the notification for this session, but 90% of you would be watching this video later on. I have come online this early. Majorly because I don't get time midway through the day, and it would be very difficult for me to come online. But I wanted to discuss with you uh, about a couple of sectors that has been ignored for many months now over the last year and a half or so, and I think it is time to have a look at them. And we'll discuss about three four companies which are renowned companies in this sector, but they look pretty interesting at the moment. So we'll discuss about that. I'll discuss about the markets as well, and we'll answer your queries or whatever queries that come in the next 20-25 minutes or so. So let's begin the session. For the first few minutes, I'll discuss about just the current affairs in the markets, and a little bit about sports as well. So uh, basically, the market, so what it has been doing is that it is correcting from those 18,700, 800 levels, and there are two, three reasons for the correction that have taken place uh, over this period. And the first one has been the FOMC minutes, in which it seems like that the rate cut that we were thinking about will not come that quickly. So basically, what is going on is that. As far as I'm concerned, I'm pretty confident that post June there could be a cycle of rate cuts that would happen in US and Europe, and that's why I bring to you these three four companies. But what the Fed has said in the minutes, it seems like that there will be no rate cuts and rate hikes could continue till June July, and then there'll be status quo. But I believe the US Fed would need to now cut rates from June July onwards, and they might increase rates once, probably in March, and that's just about it. And because the growth is stalled in Europe and US, and European banks would do the same. So that's my call on the global picture. So that is one of the reasons that investors believe that the growth would remain stagnant for the next 1 year, and that's why a little bit of selling has taken place, which is, in my opinion, welcomed with the kind of run up that the market has seen to 18,900 or so. 1,000 point correction, 1,100 points correction is par for the course, and I won't be surprised if we go to 17,300 even. So, in my opinion, I think we are headed towards 17,300 on the Nifty. We are headed towards a 3-4% decline in the mid and small cap index, and 5 to 7% declines in our stocks. Uh, but that would only make this market and these stocks and any stock that is growing at 20-25% more attractive. In fact, most of the small caps and mid caps are looking very attractive. If you really want to know as to which stocks I'm looking at, the watch list, and I'm closely following, become a member on Patreon. You'll get the watch list, you'll get everything in there, specifically about companies which I believe that look good from a 3 months point of view, 6 months point of view, and 1 year point of view. So, in my opinion, I believe that we are headed towards a field in which small and mid caps should end up doing pretty well. Uh, and the Nifty may correct and may remain in a range between 17,000 to 17,700, 800. In that range, I think 18,000 may not be touched for the next month or two, if there is a further decline in the uh, indices, especially with what has happened with Bajaj Finance and the kind of updates and results and everything that has come out. So there'll be correction there. So major stocks there in the Nifty is correcting. So I think the focus will shift towards mid and small cap, and especially micro cap, small caps. I think they are set to do reasonably well this year. That's my opinion. So that's about the markets. Let's just discuss about sports a little bit. Vikas, very good morning to you. Srinivas, uh, good morning, and thanks for being here this early. And hope you're doing well. And if you are from South India, I think the weather would be much better than what it is in here. It's around at the moment it's around 9 degrees, and extremely cold. Although the sun is out and it's sunny, but it's cold. So that's a call there. Amit, a very good morning to you as well. In terms of sports, India has done well yesterday by winning the series 2-1. Now, the thing is, India has been winning bilateral series since 2019 at home. So it has been 3.5 years. In T20. So, and they have been winning bilateral series abroad as well. They are doing pretty well. The thing happens is, and the problem happens in knockout matches in global events. I believe that going forward, there has to be a need for youngsters to be part of the T20 setup. And if this kind of a team, what we have today, plays in 2024 in the West Indies and the US, where the World Cup is, I think we are going to do reasonably better. Also, one needs to remember that now the pitches in West Indies, specifically, except for Jamaica, are pretty spin friendly. So I think if we can get our combination right, with Jadeja coming back, Ravin Jadeja, if he comes back with Akshar Patel, I think things will look much better. We should have at least 6 7 bowlers in our 11, at least 6 7 individuals who can bowl well, and then only we can probably survive the initial scare of probably in the power play when people go after our seamers. So one or two seamers might have bad days, but spinners could take control, and vice versa. So I believe having four pure batsmen and seven players with batting abilities as well as bowling would be best, and that is what India has been doing over the last three internationals. India will play three more internationals against New Zealand in the coming weeks. That's a T20 internationals, and then we will be heading towards the One Day World Cup. So more One Day matches would take place. So Amit, the One Day World Cup is in India in October, and the T20 World Cup in June July next year is in the West Indies and the US, and hopefully they'll do well. There hasn't been very good memories from the last time you can say a global event took place in the West Indies in 2007. So hopefully this time around things would be much better. So we are on the right path. I don't see a place, unfortunately, for Virat Kohli or KL Rahul in this side. We'll see how things pan out. Maybe Virat will play the World Cup in the T20, but I think having youngsters is better. Probably Rohit Sharma might just open with Ishan Kishan, and other players would remain the same. So we'll see how things pan out, but we are headed uh, towards a better probably performance in the world events. Hopefully, we reach at least the finals next time around. So that's in cricket. Australia is taking on South Africa at the moment, and that's what I'm looking at. So it's 1 for 40 South Africa at the moment, and this is following on, and they have 9 wickets in hand, probably around 35 overs to go. I don't see a result coming through. I think this might end up as a draw, but we'll see. We'll see how this happens. You never know that Australia at their home might just wrap up the series 3-0 in that manner. So, and then Australia will be touring India, and that will be a big test series in February. So, that's what has been happening. Pakistan drew the test match against New Zealand. Very interesting, very close test match. Probably we could have played three more overs, and the results could have been either way. So, very interesting test series, that one. But the way Pakistan has played this year, I mean, in 2022 and early 23, I don't see Babar Azam staying captain for long unless they play pretty well going forward in a couple of test series that awaits them. So that has to be seen there. So looking forward to the Australian Open, looking forward to the Hockey World Cup that begins next week, in a week's time or so. So that's something to look forward to. Now coming back to the markets. Thing is that uh, we are looking at a situation, and this has come up just recently, that people are now scared of buying into sectors which did extremely well in late 2021 and in, you can say, the first 6 months of 2022 calendar year. And I'm talking of IT and pharma. I believe that IT and pharma will come back into fashion in about 2 months or so. I think there is a base formation that is happening in both, and we should look at market leaders in their spaces in these sectors rather than looking at micro caps uh, in order to probably buy into, because even the larger stocks have corrected 30, 50, 70% uh, from the top. So I have picked four of them, quite interestingly, and probably two of these in the two from pharma, two from IT. Now, the pharma stocks I have talked about many times, that one can definitely look at. Now is probably the time to probably start accumulating these. You can do your own analysis and probably take a call. The first one in this list is Dr. Reddy's. I believe Dr. Reddy's, which have hardly corrected from the top basically, but has been consolidating for many months. So what I have seen is over the last 3 years, if we look at from 2020 till now, it made a high of with heavy volumes on 18th of September 2020 at 5,333. From there it went to 5,600 again in July of 2021. So from there, from 5,600, the stock is around 4,200. So there has been a near 30% correction from the highs. If you can get the stock anywhere, I mean, between these levels to 4,000, it's a very good level to accumulate. Your stop loss, or your, you can say, margin of safety is big. Your stop loss could be 3,800. And once the cycle reverses and this moves, I think this will hit new highs. So 5,500 is a safe target from a 1 year point of view. And you could be looking at a situation where Dr. Reddy's could be headed towards 6,000 plus in a couple of years time. So in my opinion, Dr. Reddy is trading at a P of 22, forward P of 20. Looks very interesting because and I'm taking this, you can say, everything, all this data from screener, just to inform you. So its median P for the last 3 years has been around, you can say, 35, and currently it is trading at 20, at a P of 20, so 22. So I think this is very attractive in terms of Dr. Reddy's. Going forward, I think there will be a rally in here, 30-40% that one can gain. So that's the call, Buchi Babu. A very good morning to you. On Dr. Reddy's, very comfortably one can accumulate from these levels up to 4,000. Second stock in this pharma brigade that I have picked, and I picked these two because I want margin of safety for all of you, more than huge returns. Returns will be there, but there's less chances of you losing money over a 18 to 24 months period. The second is Divi's Lab at around 3,400. Results have not been that great, and the stock has plummeted sharply, trading at 30 times earnings at the moment. And if you look at its, you can say, 5 year average median earnings, it's around 45 times, trading at very interesting valuations of around, you can say, 29, 30 times. And again, in Divi's, I see levels of see, it has corrected over the last, you can say, 1 year or so. Over the last 15 months, it has corrected from a high of 5,300, 5,400, all the way to 3,100. So the correction has been sharp. Currently it is down somewhere around 35% from the top, trading at 30 times. Normally trades at 40 to 45 times. Very interesting company, top notch company in the pharma space. One can definitely accumulate here, and on dips to 3,200 as well. I think 3,000 is your stop loss. And again, new highs over 2 years is a pretty normal tendency for these stocks to come back to new highs within 2 years once the cycle reverses. So I think 5,400 is your target. So Divi's and Dr. Reddy's both can be accumulated here. And on dips, I think I think going forward, these two will make you decent amount of money with lesser risk of them going down. So these are the two picks from the pharma space. The two picks from the IT space uh, that I have looked at, and I believe that one can start looking at very seriously. One is Tata Elxsi. I believe whatever I would say drama had to happen with the stock uh, over this period, that the valuations were so stretched at around 10,700 or so in August of last year. The correction has been pretty sharp. Over the last 6 months, it has corrected by 40%, and the stock went even below 6,000. I think a base is about to be formed. It will take time. All these stocks will take time to make you money. Probably next January, you would need to look at where these stocks are. So Tata Elxsi trading at 58 times, growing pretty reasonably, having an ROE of around 38. Uh, so any dips towards 6,000, 5,800 is a buying opportunity. Even you can accumulate here. 6,000 is a huge support. If you look back, uh, even about 1.5 years back, you can see that around 6,000, around in February of 22, when the Ukraine crisis began, the bottom was made around 5,800, 5,900. Again, we have reached there. It is kind of a double bottom kind of a thing in a year's time. Uh, if this reverses again, we can see 9,000, a good 40-50% upside is a possibility here over the next 18 months. So this is one stock to really keep an eye on now, and one can accumulate over the next 1 month, and you will not get opportunities in stocks like Divi's, Dr. Reddy's, and Tata Elxsi to buy 30-40% lower. In this case, the stock has corrected 37% from the top. In case of Divi's, the correction has been about 40%. In Dr. Reddy's, it's around 35%. These are top notch companies that have corrected from the top so much because of the global condition. Now, coming to the fact that when these things will reverse, it will take time, but it looks like that the stocks have done their things. The companies have done their thing. On the ground in Europe and US, things will get back to normalcy in a while. Probably it will take a year, but these stocks may reverse by, you can say, March, April or so. So we have to take positions earlier than that in order to make money. So probably a contrarian play, but these three stocks look very, very interesting. And a smaller company in the small cap domain is a Mastech. I believe Mastech, with the kind of deals it has had, numbers have not been that great, but the stock went sharply down over this period from around, you can say, 3,600 in around March, April, to what are we at 1,700 now. And one has to agree with me that at around 34, 3,500, everybody was a buyer. And when the stock went below 1,600, close to 1,550, 1,520, nobody was looking at it. And now I think it is making a base again. This will take at least 2 months to complete the base formation and then make an up move, and by that time December numbers will be out, which won't be great. So you will have time to accumulate the stock at current levels, and also around 1,800, 1,600, in this region between 1,600 to 1,800. I won't be surprised if we see 3,000 on the stock in a year or 15 months or so. So a good 50-60% upside is a possibility here. Currently, it is trading at a PE of around 17, just about 17. If we look at a 3-year average PE for Nasdaq, it's around 17. So it's at, you can say, average PE. What it trades at, its highest PE has been around 30, 33. So I think there will be the PE contraction thing that had taken place over the last year or so is about to complete. There might be a 10%, 5-8% decline in these stocks, but that's just about the risk you have. But over the next 15, 18 months, the stocks could give you 50, 70, 80, even 100% in these stocks. We don't know, but the returns could be big. So Mastech and Tata Elxsi in the IT space, Divi's and Dr. Reddy's for Divi's and Dr. Reddy's from pharma space look good. Oliver, thank you for your comment. I have not looked at Abbott that much. I hope it has done well for you. Uh, it's a similar kind of trade. So Abbott is at around 22,000. It's at a new high at the moment. And so I've seen this stock after a year. So this was a trade that was given around 16,000, 16,500, and look at the way it has moved to around 22,000. So again, there has been a case of PE expansion in Abbott from a PE of around 34. It went to as high as around 65 and currently trading at a PE of 51, 52. So that's what happens. Its average PE is around 50 and it was trading at 34 times a year back. And so I work on, or I play on this PE contraction expansion thing, and I believe that now IT and pharma look extremely good. Even uh, when going forward I get opportunities, I'll buy into probably an IT company, not these, probably something else. I'm looking at it. So if you really want to know what I have bought or what I'm planning to buy, etc., become a member on YouTube, on Patreon, on WhatsApp, and you'll get that yearly membership on WhatsApp. So you can probably email me for that, and I'll give you the description. So, in my opinion, going forward, after probably a correction of around 5% on the Nifty, when the recovery takes place, the recovery would be into other spaces rather than the spaces of metals or all these banks, etc., which have already run up. I think better spaces would be where the correction has been extreme and people have probably nearly tired of selling stocks, and I think IT and pharma is something to look at. All right, guys, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow channel. That will help you also ask me questions and eke out answers in greater detail. So, Joyce, you're asking about Sequent Scientific. The problem with Sequent was even I sold at a loss of 30%. So, that's a disclaimer from me that in Sequent I sold at a loss of 30%. Even in Mastech, I sold with a loss of around 20-22%. See, Sequent is not coming out with even decent numbers. In case of Mastex or Tata Elxsis of the world or all these companies, they are coming out with decent growth even in very difficult time, growths of 10-12% at least. But in case of Sequent, we have gone into losses. The company has gone into losses, and if you go through their, you can say, con call, you would understand as to what I mean, because once you go through a couple of con calls, you might not look to probably hold on to the stock even when you're losing 30-40% or whatever you're losing. So once the numbers reverses, only then probably get into something like a Sequent. Even in mid cap pharma, I'm not that confident of buying into anything mid or small cap pharma, because the rally may take place but the numbers in most of them are not that great or give me that confidence to buy into. So Amit, that's what exactly I said, that in mid and small cap pharma, it's very difficult to say which one will perform big time. But here you're getting something in these two stocks that I mentioned. You're getting 30-40% upside with a good margin of safety. So that's why I mentioned these two. I have not tracked Reflex industry that much, so I won't be able to comment on it. So I think Buchi Babu, you're asking about Action Consulting. Is it AC Action Consulting that you're talking about? Action Construction or that stock? I think one can buy on declines. If the market goes to 17,000, there's steep decline of 8-10%. Yes, you can accumulate that stock. Otherwise, I won't say that you buy. If you have it, hold on to it. I think over the next couple of years, with the kind of government initiatives in construction and you can say growth activities, economic growth activities, I think things stock will do well. So Maruti is a buy on declines to 7,000, 7,100. Not at this point of time. If you have bought at these levels, Baljit, hold on to it. But if you get it at 7,000, 6,500, add more. It should do well. I won't say that the stock will not do well in the next couple of years. Autos have not done well for the last 4 years. So I think the cycle should turn around after 4 or 5 years. So hold on to the stock. So, see, all cargo before demerger did extremely well, and all these logistics stocks have run up and have done their things. And that is what exactly I am saying, that 8 months, 9 months down the line, when most of the IT and pharma stocks might have done their thing by September, October or so, then people will ask as to what needs to be done, whether we should get into it or not. And then probably all other sectors, or a couple of other sectors which have run up recently might correct. Consumer stocks may correct, something like a Britannia which could go to 5,000. I don't know, may just surge to 5,000, 5,500, may correct back to 4,000 and look good. So that is what you have to play on. At this point of time, I won't say that you get into any logistic stocks at the moment. So that's my call. Naresh, Nykaa do look good, Zomato do look good, everything look good, but my point here is that uh, when will this thing turn around for something like InfoEdge, Nykaa, Zomato? I think once Europe, US turn around completely, these stocks will perform somehow or the other. They have a linkage to the Nasdaq. Once Nasdaq performs, then these companies will start performing. So if you have a 18 to 24-month time frame, yes, Nykaa, Zomato on dips to 48, 45 can be looked at. Nykaa at current levels can be looked at, but you have to be patient with these companies. Uh, I think yes, Valega Ravi, thanks for your being a member. Yes, Kilpest can be accumulated at current levels, and I believe that around four, if you get it around 400, that's best. 400, 410, but have a 2.5 year time frame. This should do well over a 2 year period. Kilpest, so that's the call. A disclaimer: I have the stock in my portfolio. I've not looked at the stock Shiva, like, so won't be able to comment on it. Sorry. That's my call. All right, guys. Thank you. Thanks a lot for being online. We'll be online again on Thursday. Please do like and subscribe my channel. Hit the bell icon so you can get my video straight away when I post it. And kindly do subscribe to my Patreon network. Thank you.